Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. It is a very quiet day of trade right now. So for the frontline index, for the Nifty, we're seeing a gain of just around 27 points. Like you can see, at least we've moved back into the green, but it has been quite range bound and quite quiet all through the day today. Even if you look at the mid-cap index, it is seeing just a minor outperformance, but only a gain of around 0.3%. The Nifty Bank is, where we're seeing a little bit more push come through in the past few minutes. So that is currently up around 85 points, once again led by the PSU Bank. So that's what's happening with the market action. Of course, we're trading on thin volumes because of the holiday season. So we'll talk more about the market. But first up, let me invite our guests on the show because we have lots of queries as well. Astha Jain, research analyst at Hem Securities, as well as Shivangi Sarda, analyst of equity derivatives as well as technicals at Motilal Oswal Financial Services. Both join us now. Astha, Shivangi, thank you very much for taking out the time for our viewers and stopping by to answer all of their queries. I'm going to get straight to it. Vikram Shenoy is the first person who writes to us from Mumbai. He says he holds 150 shares of Bajaj Finance, which he bought at an average price of 5,500 rupees. He says he's a medium-term investor and wants to know whether he should continue holding on or he should move some other, some money to other stocks within the financial space. So the likes of ICICI Bank or SBI is what he's looking at. Astha, let me come to you first on this one. Anytime someone asks about Bajaj Finance, my first question is always, do you think that this is just one of those evergreen stocks you should have in your portfolio and, not get too concerned with perhaps the 6-month, 1-year move? But the interesting part here is that he is looking at some other big banks. So do you think that kind of a switch would make sense?
Hi Pavitra, good afternoon. So first of all, talking about Bajaj Finance and to in the answer of your first part that yes, it is a evergreen stock which one should have in their portfolio. So my stances here is that he can hold his Bajaj Finance holding. Here I am recommending initial price target of around 7,200, and I think there is no need to switch to SB or ICICI Bank. Meanwhile, if he has some additional funds, then he can definitely look after these two counters. But just for the sake of switching it, I don't recommend, because Bajaj Finance in itself is one of the strongest. NBFC, they have shown the strong AM growth of around 31%, which in itself is looking very strong. In fact, going ahead also, the business is in the transition phase and they are going totally digital. So that will be working in favor of this company going ahead. In fact, we are projecting the net interest income to grow at a CAGR of 26% as well as operating profit at a CAGR of 26% from FY22 to FY24, while on the bottom line we are more bullish because here we are expecting CAGR growth of around 39%. So all in all, I think Bajaj Finance is one of the strongest NBFC and there is no need to switch. Yes, but if some additional funds can be deployed, then definitely ICICI Bank and SBI are stronger candidates in banking space. So all in all, I recommend him to hold with a price target of 7,200 at the initial level.
All right, big hold call coming in there from Astha. This is for Bajaj Finance. And of course, other big banking names like ICICI Bank and SBI also look good. Shivangi, let me come to you on this one. How are the charts looking? Of course, for the year, it's not done much. I mean, it's actually negative for the year. But do you think that, say, for the next 1-2 years, if our viewers to continue holding on to the stock, he could sort of see some money made in this one as well?
We're talking about Bajaj Finance, right?
Bajaj Finance. Yes, Shivangi, we're talking about Bajaj Finance here. So he wants to know whether he should hold on for a medium-term perspective. He's also asking if, does it make sense for him to get out of Bajaj Finance and look at maybe an ICICI Bank or SBI as well?
Okay, thank you, Pavitra, and good afternoon to all. Thank you for having me on the show as well. So we've seen that overall banking and financial space is quite resilient and it is an outperformer as compared to the broader market. Bajaj Finance specifically has taken some pause in the immediate near-term future. It negated its higher highs formation of the last 11 years. So at this moment, technically, we can trail the stop loss to 6,300 zones, which was its near-term support levels. Now, if we talk about the ICICI Bank and SBI Bank, they are the elephants in their private and PSU space respectively, and they are definitely very strong. So one could deploy additional funds over here as well. ICICI alone has performed 22% in this year and SBI 31%. So it is an outperformer and is expected to continue to be one, and we could expect 1,000 odd levels in ICICI Bank and 650 in SBI in the longer near-term future.
All right, that is the call coming in on Bajaj Finance as well as these banks, ICICI as well as SBI. The next query coming in, this is interesting. Ashutosh Gandhi writes to us from Pune. He holds 150 shares of Tata Steel, which he bought at 100 rupees a piece. He also has 10 shares of JSW Steel, which he got at around 700. He says he's a medium-term investor and he wants to know whether he should hold or exit at current levels. Shivangi, the metal rally has really been in play this week, on the back of what's going on in China. Do you think this is something that could extend for a while from here?
So steel stocks specifically are quite cyclical, and they have a very high beta nature kind of stocks. So one should have a close stop loss in hand for these stocks. As far as Tata Steel and JSW is concerned, the stocks are quite strong and they are heavyweights in their sectors. It recently saw a price and open interest surge, which will drive these two stocks to higher zones, and one can hold these stocks and trail the SL at buying rate. Of course, one should not put all their eggs in the same basket, so you should definitely diversify out of the steel and metal stocks as well.
Okay, that is on both of these. Let me also ask Astha what she thinks about these. Astha, he's made money on both of them, but what we're seeing this week, do you think this entire China reopening could really become a much bigger theme and, then of course aid these stocks?
I think so. If everything goes in favor of China, basically on the COVID part, I think the metal will again gain the momentum. Now, talking about Tata Steel, I think definitely he can hold the stock with the price target of around 120 to 130 at the initial level, because Tata Steel is looking good. They have performed good on the financial part also in the last quarter. And what happened to this company is that we have seen some sort of increase in their net debt level because of some sort of NIN acquisitions and other dividend payouts. So in that way, the net debt has increased. But I think going ahead, the company is going for the capex, and it is around 3,198 CR. So that will be helping company in posting steady performance in the future also. So I think there is no need to worry. He can hold the stock with a price target of 120 to 130. Talking about JSW Steel, even JSW Steel is looking, I think, a hold as of now, because they have done their Dolby expansion, which is working very well in the favor of company. So going ahead, I think all these steel companies are going for the capex and the expansion that will be yielding results in the future. So on that basis, only for the longer term horizon, I'm recommending JSW as a whole. Here the price target can be set at around 880 to 910 level. So both of these stocks are looking okay to me, and I think even the metal space can work favorably if China this open up will be continue, and we will not see any sort of further worries on that part. So in a short, hold is recommended for both the counters.
All right, hold call for both Tata Steel as well as JSW Steel, and the metal rally could sort of extend from what we are seeing this week. The next query coming in is from Sumant Kumar, who writes to us from Orissa. He holds 75 shares of Zee Entertainment, which he bought at 370. He's a long-term investor, so that's the good news. And he wants to know whether he should hold or sell at current levels. Astha, take us through your call on Zee Entertainment. Of course, he is suffering some losses that, on the price that he bought. But take us through how you look at the stock, especially in the light of that entire Sony merger.
So as you have talked about Sony merger, so what we are expecting about this merger, that I think it will get completed by March 23, and it will take 5 to 6 weeks. I think the whole process will go on. For that reason, we can see the stock, maybe stock prices won't be working for those 5 to 6 weeks. So all in all, by March 23, we will see this all thing will happen. So now talking about Zee Entertainment's own fundamentals. So here the results were not very strong in the quarter gone by, because they have spent a lot on the advertisement. So in that way, we have seen some sort of compression. But going ahead, I think the management is quite focused, and now whatever they are planning will definitely helping them in gaining market share as well as the viewership. So in the longer run, I think Zee Entertainment can be a whole target. So I'm recommending hold for this counter.
All right, hold for Zee Entertainment. Shivangi, what do you think of Zee Entertainment? How does it look on the charts?
Looking at Zee Entertainment in particular, the stock has actually broken its multiple weekly support zones, and a sort of negative divergence can be seen over here. So some range-bound move can be expected over here, but my advice would be that we can exit and plan on sector rotation from now.
Okay, so that is the call on Zee Entertainment, both from a fundamental as well as technical perspective. The next query coming in is from Astha Jain, who writes to us from Bhopal. She holds 25 shares of ONGC, which she bought at 100 rupees. She says she's a medium-term investor and wants to know whether she should hold or she should switch to some other stock over here. Shivangi, what is your call on ONGC? She's made money on this stock, but do you think there's lots more upside? Of course, we've seen this one move really drastically to, to the crude news every day.
Exactly. So ONGC in the energy space has witnessed quite a lot of whipsaws regarding the crude oil price movements. The stock in particular is very strong and one can hold. What we could do is to protect our capital, we could trail our stop loss to around 138 zones, and we could see an upside over here for 160 plus level. So it's definitely hold.
Okay, definitely hold on ONGC. Astha, is it a definite hold for you as well?
Yes, I do agree with Shivangi. Even we are giving the price target of around 165 to 170 odd levels for this counter. This is a hold because fundamentals are looking quite strong. First of all, I mean, despite this windfall tax impact, they will be able to maintain their realizations at around $75 per barrel. So that is looking very strong, which is higher if we compare it from FY15 to FY22. On the other hand, if I talk about the gas also, so due to this Kirit Parekh recommendation, they will be, I mean, it is also a positive for this ONGC because they recommended for this price floor at around $4 per MMBTU. So I think even the cost is only $3.5 MMBTU to company. So in that way also the Kirit Parekh recommendation will work in favor of the company. So all in all, I think, and if the crude price will remain above $80 per barrel, I think their realization would continue to hold strong. So ONGC is looking strong to us, and we are recommending hold on this counter with a price target of 165 to 167 at the initial level.
That makes it very easy for our viewer then. Both of our guests agreeing that ONGC is a definite hold at these levels. You've already made, good money on this one, but looks like there is more in store for you. Shivangi, Astha, I request you to please stay on with us for 2 minutes. We have to take a quick break, but we'll be right back and we have lots more queries on the other side. Welcome back. You're still tuned into Your Stocks on CNBC-TV18, and we still have Astha Jain as well as Shivangi Sarda to answer all of your stock-related queries. We also have a caller on the line. A.R. Khan calls us from Bangalore with a query. He says he has investments in Shafla India as well as Tube Investments. Mr. Khan, very good afternoon, and thank you for calling us. So like I said, you have investments in Shafla India as well as Tube Investments. Both of our guests are on the line. So please go ahead and take us through your query. Mr. Khan, can you hear me? All right, looks like there's a bit of a connection issue, so I'm sure the team is trying to patch that connection once again. But let me just read out the query in the meantime. He has 1,000 shares of Shafla India, which he bought at 960 rupees a piece. He also has, investments in Tube Investments. And he's saying that he's a medium-term investor and he wants to know what he should do with both of these. Let me come to you first on this one, Shivangi. How do you look at both of these stocks? I am trying to, get the caller back on the line so we can get a few more details about how long he's willing to hold, some details of that sort. But just, on a technical basis, how do both of these stocks look?
So talking about Shafla first, we've seen that this stock has doubled in the last 1 year and clear outperformance over here. And currently the stock is moving in a range, but it is coming out of its narrow range on weekly frame. So one can expect 2950 zones over here in this stock. So, hold on this stock with a trailing stop loss of 2700 zones. Now talking about Tube Investments, now this stock is taking some pause, but if we look at the overall structure, it is quite positive and holding on well to its 50 daily exponential moving average on the chart side. So this stock is also on hold with an immediate target of around 835 zones and a stop loss of 777.
Okay, got it. And my team is telling me that Mr. Khan is back with us on the line. Good afternoon, Mr. Khan. Thank you for writing in to us. We were just, talking about your query where you said you have investments in Shifla India as well as Tube Investments. Both of our guests are on the line. So if you could please go ahead and take us through your query. Okay, looks like we are really not having luck with this connection. But, Shivangi has already taken us through her view here. Astha, let me come to you. How do you look at, both of these names? He is making profits on both of them, but he is willing to hold on for a little bit longer as well if you think there's potential upside. So what do you have to say?
So first of all, I would like to congratulate Mr. Khan for his investment in the Shifla India because it is yielding very strong profit. But my take is again hold for this counter for the future price target of 3100. So Shifla India is looking good to me because of 2-3 reasons. First of all, they have always outperformed the industry. So this is one of the major factors that they have outperformed the industry growth because majority of their revenue is coming from the automotive, I think 49%, remaining from the industrial part, which is 34%, and 16% is for the export. So even they have seen good traction in the export business also. Going ahead also, the company has a plan to launch new products in the aftermarket business. So it will be also helping them, and they will be continue to perform strongly because we have seen recovery in the economic activity all over world. So, and they have, one more important point about this company is that they have a technological edge as compared to their peers, and they have a very strong relationship and established relationship with one of few established OEMs in the world. So all in all, it is a very strong counter, maybe a slow mover, but I think ultimately price target can be set for 3100, and even if he want to hold for a longer, then I recommend him to hold. Talking about Tube Investments of India, even I think he can hold it. Here the price target can be set at around rupees 3000 also. So Tube Investment is also looking a decent avenue right now to deploy the funds and or to hold the funds in, because I think this company has a capex plan of around rupees 10 billion, and EV is their major focus area. And in fact, we have seen the traction in the automobile revenue as well as their railway business is looking good, and even going ahead, other businesses will also be playing well for the company. So even Tube Investments is looking good to us, and price target can be set at around 3000, 3010 level at the initial levels.
Okay, that is the complete perspective on Tube Investments as well as Shifla India. I'm going to try and squeeze in one last query over here. Jay Sharma writes to us from Mumbai. He has 100 shares of Godrej Properties bought at 1459 and 200 shares of Apple, which he bought at 1225. He's a medium-term investor. He wants to know what he should do with both of these, holdings that he has. Astha, let me ask you first on Godrej Properties as well as Apple. He is making losses, and for the year, both of these stocks have seen some cuts. Do you think for a medium-term perspective, if he's to hold on, he can, see some kind of recovery here?
Yes, I think so. And that's why I recommend him to hold Godrej Property. Initial price target can be set at around, I suppose, 1500 or so levels. So for Godrej Property, they have clocked strong sales booking on the basis of the new launch in the NCR, Pune, as well as Bangalore. And now going ahead also, they have a strong pipeline. In fact, the company has taken the price hike also. That is really very good. So despite, cost inflation is not working favorably for the company. So to combat that, they have taken the price hike of around 2 to 5%. So I think that is again looking good. And even management in one of their commentary has said that even they are not so much worried about this rising interest rate scenario. So I think Godrej Property is looking decent, and we are expecting it to clock the revenue of around rupees 100 billion for the whole year of FY23. So I think it can be a hold candidate with a price target of around 1500 also levels. Another query is on the Apple India. So Apple India is also looking good to me. Here the price target can be set at around 1295 or 1300. So Apple India, as we all know, it is like 90% of their revenue is coming from this converted per user basis. And now, due to this festive season, H2 will be better for this company because more and more companies have their budget allocated for advertisements, etc. That will be working favorably for company. So I think H2 will be a better year for this, better quarters for this company, and hence I am positive on the stock. Hold is recommended. Price target can be set at around 1295 to 1300 levels.
Okay, hold on both of those stocks, Godrej Properties as well as Apple India. With that, we're going to wind down on this edition of Your Stocks. So Shivangi, Astha, thank you very much for taking out the time and speaking to us today. But we're going to wind down on that note. The market is as quiet as it comes. It's just around a 15-point gain that you are seeing on the frontline index. The mid-cap seeing only a 0.3% move. So we're going to wind down. Remember, you can always email us your queries and we will keep taking them up with our experts. And you guys stay tuned. Closing bell comes up next for the last 1 hour of trade.